Welcome to TradeTheMBI.com. This is John's reports for the 15th of July. We reached the midway point here, and well, we had the orange dip, we had the steel cross above, and that happened on the down day. And what did it do? We got down to the 76%, popped right back up off of it. Rising red, rising green, rising steel. All of those are bullish moves. However, we do have to watch that warning that we're starting to see on the extreme. But breakout to new highs, certainly within the range of possibilities here. And I think that everyone's going to be watching that because that could fuel even further breakout, especially as they talk about secondary stimulus going on. We still get so many mixed reports. I know we just saw a report out today that the number of deaths previous years in Texas is from flu is way down compared to with the coronavirus. And then we had the reports about the fake false positives, where some of the areas in Florida were giving 100% positive results. So it's getting confused. It's hard to determine what is fact versus propaganda versus political positioning at this particular point. You've got Biden talking about Mao, quoting him while announcing his $1 trillion Green Deal. And then you have the opposite side of it, where Trump lambasting that and trying to get mostly the economy as a turnaround situation, because ultimately that is the biggest barometer for all people. Because if you close things down and don't have work, it's a problem. And the idea that the market is rising not just because of the inflation, but also because of this huge stimulus, that's really not the optimal configuration you want. You really preferred it like earlier in the year when things were humming on all cylinders and moving forward. Plus, then you have the added tensions of Trump going after the Hong Kong issue and China and actual confrontational stance. So you've got both confrontational issues with Russia and China, which who knows where that's going to play out. But for now, the market's ignoring that, as you see the cyan on the NQ well below the red, which has been a continuation. Interestingly enough, though, that the NASDAQ took a little bit more of a beating on this last move, and you can see that it's kind of pairing a little better to the ES in the sense that while the ES may be making new highs, it's been behind from a expansion move, so it has some catching up to do to the NASDAQ from that standpoint. Euro continuing its rise, and this is not a surprise. They really want to push towards the upper side of this, especially as Europe has been more consistent in its opening. Of course, you look at the Sweden model, and they didn't close anything, and they've comparatively, relatively speaking, they are the size of Michigan and have overall fewer deaths and never closed their economy. And it's an interesting comparison, how two different approaches. One being that, you just continue, and this parallels to what we saw in the 69 flu issues, where that was the summer of love in that, and everything was normal and continued on despite it being a very severe flu season. But that push for the euro is definitely also about ECB maybe getting it together as far as its added stimulus as well. So a lot of interesting factors going on. Then, of course, oil still holding at the high side of this range, and it's just waiting for a breakout of justification based on economic activity. And as soon as that corresponds to it, you're certainly going to see it pop. And with it will be a breakout of gold into new highs without any question. It's just a matter of waiting for it. Intraday was a lot of really good action, so to speak, both up and down. It kind of started flat. Things looked like it was going to be modestly boring, and then we ended up with a nice little dip below that 3140, which caught some interest right back above it, but broke down a secondary time, and then again wasn't able to dip all the way to the 3115. And when it caught that super oversold and turn around, that began to build towards later in the day. Slide over, you can see that once we hit the peaks, we started to make some significant, these are some pretty good sized moves. When you're talking about going, right here we were in the 25, 26 range, and you shoot all the way up to the 54, hovered around there, played around that 54 algo level for a little bit, broke out to the next one, back up to the 70s, and then once we held in between the 54-70, when the additional buys came through, that then led to the breakout towards the end of the day. And then right afterwards, you had continuation of that move, and that's what's kept us at the highs. And even on this most recent short, you can see there was no spike of Power Mode 2 within the DOC spread, and that's why it's held up quite well, because there was no crossover to justify the turnaround sell. Because when you get that breakdown here, you're looking for that spike. That's going to give you a little bit more, and then you're just waiting for the turnaround. And it came much later right here and led to the buy, and that's pretty much what you're seeing here. Plus, you've got that complete opposite effect of what we saw in the big sell. Steel resets below the red DOC, and that gives a continuation of that. All good stuff. So ranges are beautiful, and the action is spectacular. So as it looks now, I would look for us to at least reach back towards the highs and probably break through them. We're in complete reset mode right here, as we're in the pre-market right now. I will post anything relevant on the Skype chat, and we will go from there. Trade well. We'll talk to you later.